How are we getting on, people? I'm just going to wait for a few people to join, and then we can crack on today. If there's any markets that you want to see me analyze, let me know. And if there's anything you want me to go through or go over today, again, please let me know. Oh, I can hear myself on that now. But yeah, I'm just going to wait for a few more people to join, and then we can crack on. There's a few pairs that I'm looking at today. I've got the NZD card, XAU USD, Euro USD, and the GEU, or the cable. But yeah, those are the markets that I'm looking to be active in today. So I'm going to do some analysis on those. But if there's any pair specifically, it doesn't have to be Forex, can be commodities, indices, precious metals. Just leave them in the comments, and then I can get them analysed for you all. Just checking the messages on here. I'm first. So it's this is quite early, really. To the times that I would usually do these live sessions. I'm usually doing them coming into the New York session, but I just thought we'd crack on. We'd have an hour and a half before the New York session. Do some back testing, do some analysis, prep for the New York session, and then gives you guys the opportunity to take notes, mark areas and zones out for yourself, ask questions, and then obviously we can crack on then in the New York session. We've got some fundamentals as well due today. Let me have a little look and see. We have some news at 1:15 for the euro. So we've got the monetary policy statement, and then at 1:30 we've got unemployment claims. Let me have a little look at this. This is obviously for the US dollar, and then 1:45 we've got some more high impact news for the euro. So we should see some good volume being introduced today, which will be good. So having a look at some of the history on the unemployment claims. So the results have actually been better than. So what we look for when it comes to fundamentals, especially when it comes to the unemployment claims, obviously we want the forecast. So we want the actual to be less than the forecast. In doing so, that means that it's good for the currency. Yeah. So I mean, previously July, all through July, it's been less than the forecasted, which has been good. So we should see, if this is to follow and continue, we should see the US dollar appreciate today. Now let's see how that would coincide with our analysis. Because I mean, just because fundamentals are suggesting that, I mean, our technical analysis can say other things. Now, as we know, fundamentals, especially high impact fundamentals, overrule technical analysis, unfortunately. So it's something we definitely have to be wary of. How are we doing, Dean? I hope you're okay. Can we buy Euro USD? Let's have a little look. So I sent out analysis on this market Tuesday, must have been about 12 o'clock, telling people that they need to be buying into the Euro US dollar. And as you can see, look how it's played out. We've had some beautiful positions on this market. I mean, if I just let me see if I can, should be able to do it on here actually. I know I have a tendency to show previous analysis, but this is only because I just want to show, obviously the trade that was the analysis that was sent out on TradingView. If you guys use TradingView, and and you do your analysis on TradingView and you have an account, I would highly suggest following me, just because I'm always putting updates on there, always. But where is it? I think it was, where is it? Here. So you can see this was analysis that I sent into the VIP chat actually, as well. So I wanted to see price penetrate this demand zone to break structure to the upside. This would suggest that this corrective wave trading goes down and into the demand zone is finished, and a new correction trading us higher is underway. So you can see the path that I've drawn out. Okay, and obviously a breakdown on my analysis here. Now, if we press play, you can see exactly how price has played out. Price penetrated the demand zone as predicted. We then saw price break structure to the upside. Price pulled back, giving us a valid entry. This is what this path is that I've drawn out here. That's what I wanted to see. That's exactly what we've been delivered with. And then, as you can see, price has delivered us with the bullishness we expected. So this market at the moment, we have been absolutely rinsing it through and through. So in terms of profitable positions now moving forward, how would we come to tackle this market? Well, obviously we are expecting to see price trade and surpass our take profit target. The reason why I've set my take profit target here is there is a reason. A lot of people may think, well, are the reasons for placing take profits where you place them and stop losses where you place them? Absolutely, and there always needs to be. So you'll see here, right? If I just zoom in, I have highlighted a valid order block. Okay, so you can see here this green candle. This green candle has been left unmitigated, and this is a valid order block. Okay, I've gone from the bottom of this wick here because it's all about understanding the open and closes of candles, and I say this on every live session. How important it is to understand the open and closes of candles, because it really is very important. So if we just use this as an example, and I'll kind of go over this and give you a reasoning as to why I've highlighted this wick of this red candle here. So if we have a look, right, this red candle here, opened here, price traded up, creating this wick, and then price traded down. Price continued to trade down, giving us this wick. But then it came back up to close here, right? So then when price opened this one, price probably traded up, then traded down, okay, giving us that bearishness. But then what's happened is prices then traded up, closed here, and then prices traded up again. So I like to go from here all the way to the top of the green candle. And this is just because we would have bullishness within this wick, hence why there's a wick left over, right? So that's why I highlight the wick from the previous candle, as well as the green candle that we're obviously looking to trade from here. So I'm just going to highlight this out, as this is an area that I am expecting to see price react from. What we need to be mindful of is the higher time frame structure and the higher time frame bias. So this is a bullish. We are within a higher time frame bullish corrective phase. If we just zoom right the way out, I'll go to the daily time frame just to show you this. You can see how this market has been trading us in a bearish way. We had a high, a low, a lower high, a lower low. I am now expecting price to put in that next lower high. So if we just look at this in terms of impulses and corrections, we could say, well, this was an impulse. This here was a correction. This here is the next impulse. And this here is the next correction. Yeah. So price is within a corrective phase. Now, obviously, what follows from a corrective phase is the next impulse. So I am expecting price to put in its next impulsive wave. Trading goes lower, surpassing the previous structural low, once we have the penetration of this higher time frame supply zone. But until then, price is within a corrective phase, and therefore we should be looking for buy opportunities, right? Yes, it's a bearish market overall, but price is currently within a corrective phase, hence why we are looking for buy positions. So we'll just get rid of that, zoom back in. This was just an example that I was going over yesterday about multiple timeframes, and I can go over that again today. But ultimately, what we should be doing is looking at this current wave that's trading us higher for any areas that have been left unmitigated that we could potentially get an entry from. So what I like to do is go down on timeframes and highlight areas that have been left unmitigated. We've got one right here, which is definitely an area of demand that we could be looking to trade from. But let's have a look at and see if we can find any more areas really within this price. So we could argue that this has been left unmitigated. We have some inefficient structure laying above. The price doesn't come to trade into this. Everything from here up has been mitigated in terms of this here. So we don't need to worry about that. This has come to mitigate this. We could say that this potentially has been left unmitigated also, and then I'm seeing this as well as a potential area. So I'm definitely looking to go long in this market today, add to my buy positions I'm already in on. I just want to wait for further confirmation, essentially. We just want to see price trade down and into these unmitigated areas, and price give us the rejection we need so we can get involved. But those are two areas that are fractal, and you can find those on the 5-minute time frames. And then we've got a bigger one here. That's even when price puts in a higher time frame correction, because there's no harm in price doing that. As you can see here, price put in fractal corrections like this, where it's traded down, pulled back up slightly, but then it's also put in higher time frame ones like this. Yeah, so we can expect that on the other way around. So I'm definitely looking to go long in this market. Just need to wait for further confirmation and wait for price to pull back, giving us the opportunity to get involved in a valid entry. Because there's no point now placing a position here. A lot of people who are maybe preemptive will place a position here, maybe have their stop loss set below this because just in case price taps in, or maybe all the way down here and a take profit here. But look how rubbish and look how bad your risk reward ratio is. This isn't something you want to be doing. You want to be waiting patiently for the opportunities to come to fruition and to come to you. Do you know what I mean? You don't want to be forcing opportunities. And this is why controlling your emotions and being in touch with your psychology is extremely important when we trade these markets. So yeah, definitely looking to go long. Just need to wait for price to trade into a valid demand zone in order to give us the opportunity to actually buy into this market. But those who did get involved in this trade, from the analysis that was provided, either on TradingView or if you are a VIP client of mine, well done. I'm actually going to leave this tab open so I can just refer back to this when we look at analysis. But I mean, just going back to this, it was perfect. You can see here we wanted to see the penetration, break of structure to the upside, and for price to trade higher. Price has done exactly that. Price has played out perfectly, and I think I actually predicted the move down as well. Yeah, here. So this was the actual the bearish position down and into this. So you can see from start to finish how well we've done in predicting the way that price would play out. How are we doing, mate? I hope you're okay. So we wanted to see price trade up and into this supply zone to then trade down into this demand zone, and then for price to take off trading us bullish. You can see price played out perfectly. Price traded up into the supply zone, delivered us with a bearish structure into the demand zone. You can see here. And now price has taken off. We do it again. You can see how price has taken off. So we have predicted the buy into the supply zone, the sell into the demand zone, and now the buy from the demand zone that we got involved in. So we have literally predicted every single swing that has happened as of recently on the Euro US dollar market. So it's really good stuff. But if there's any pairs in particular that you guys want to see me analyze, or if there's anything you want me to go over, now is the time. What I can do actually is I will go over I'm just trying to think what we can go over. I want to try and cover a topic. Let's talk about this, right? So what I'm going to do is I'm going to actually zoom out a little bit, and I'm just going to add to this drawing. Okay. All right, perfect. So change the color of that. Have this here like this. Okay. This would mark a break of structure. What I'm doing here is I'm just prepping because I want to actually go over a topic here: breaks of structure, things of that nature. So this is all locked, actually. 1 second. Okay, perfect. Right, so in terms of my entries and how I look to get involved in positions, I'm just gonna kind of give a brief rundown on what I look for. So let's just say, right, that this market, so let's just say this imaginary thing that I've drawn out now is a bearish market overall, yeah? So we can clearly see how this market is trading us in a bearish way, right? So we have the impulsive wave. I'm just going to get my brush. We've got the impulsive wave here. Oh, from here to here being the impulsive wave, yeah? And then from here up to here is the correction, yeah? Which is great. So within structure that is performed in these markets, we have impulses and corrections. Okay, so this bearish move here, trading us lower, is the bearish impulsive wave. This here is the bullish corrective wave. Now, when we have bearish structure, you can see that we have the deliverance of lower lows and lower highs. Yeah, so this is clear bearish structure, right? So we have the impulse, correction, impulse, correction, impulse. Yeah. So you can see here we have the impulse, the correction, right? So this impulse is just like this impulse here. This correction from here to here is like the correction here, right? What follows is another impulse. This is what follows is another impulse that trades us lower, breaking the previous low, right? So that's just to get a bit of a better understanding on that, right? Now, when we have confirmation that the impulsive wave has finished, okay, that is when we should be looking for areas that the corrective wave is going to finish. Because if we can find where the corrective wave is going to finish, that means that we can enter where that correction finishes and we can take full advantage of the entire impulsive wave that follows, right? So if we can get involved in a sell position from up here, let's say, we are able to capitalize on the entire swing that takes us lower, right? So you might be wondering, well, how do we have confirmation that the impulsive wave has finished and that the correction is underway? So that's the first thing that we need to distinguish. Well, what we do is we look at the impulsive wave that's traded us lower, yeah? We mark out the last structural high or low, depending on the direction that we're trading in. Well, in this scenario, we are trading the market in a bearish way. So we highlight the last protected low within the bearish structure. So this right here is the last protected high within this bearish structure. Why? Because this high here went on to create this low, and this is the lowest low that price was put in this market, right? So we mark this out as an area that we need to be wary of, because when we see price trade above this, we have broken structure to the upside. Now, what does this tell us? Well, this tells us that this bearish trend that's trading us lower has finished and a correction is underway. Now, why does it tell us that? It tells us that because the market is no longer following the laws of bearish structure. It is no longer protecting these highs and breaking the lows. It is now breaking the highs and protecting the lows, which is the laws of bullish structure. So in bearishness, we protect the highs and we break the lows. But when we have a break in the high, we are no longer protecting them, right? So that tells us that we are no longer following the laws of bearishness and we should look to go bullish in this market. So we have the deliverance of a break of structure. So that tells us that a correction is underway. Perfect. Then what we need to do is obviously find an area in price that price is going to trade up into before putting in that next impulsive wave trading us lower, i.e. this move down here. Yeah. So what I'm going to do actually is I'm just going to do another path showcasing the overall structure of this market, right? And I'm going to do it in white. Okay, now this may look slightly confusing, but the white line is just showing you the direction of the market. So we've got a high set, a low set, a lower high, a lower low. Yeah, so that's clear bearish structure. Now within that clear bearish structure, we have structural points that are put in the market fractally. Yeah, so that's why I've highlighted these yellow points in this in this market here, right? So as I say, we highlight the last protected high. As soon as we have a break in that high, we understand that price is now putting in that correction. So price is putting in this correction. So what we need to do is we look at the previous impulsive wave, being this one here, for any areas that have been left unmitigated, any order blocks that we can look to, trade from, basically. So I've highlighted this. Now, order blocks is a completely different thing, and I can go over this in another video, or even later on after I've shown you this. I'll go over order blocks, what to look for. But we would essentially find an area of supply, a point of interest, an order block, whatever you want to call it. So we have found an order block here. So what we want to do is we want to wait for price to trade up and into this. And then what we can expect is for supply to be introduced into this market. So if you imagine, right, we have a scale, yeah. So we have supply on one side, demand on another. When supply is introduced from this supply zone, there's more supply in the market than there is demand. So because of that, because there's more supply in this market, it's pushing price lower because there's more supply to push price lower. Okay. So when we have the penetration of this supply zone, we can expect supply to be introduced and for that to flip the S&D balance. So for price to then reverse and trade us lower. Yeah. So when we have price trade into this, what we need to be mindful of and what we need to look for is for a break of structure to the downside. So this is what we have highlighted out here. We have highlighted a break of structure to the downside. The reason why this is a valid break of structure is because this here is the last protected low. In bullish structure, the lows are protected, the highs aren't. In bearish structure, the highs are protected and the lows aren't. Yeah. So let me just write this out so you have this. So bullish structure, lows are protected. Bearish structure, highs are protected. Yeah. So just put that there. So bullish structure, lows are protected. Bearish structure, highs are protected. Why is the bullish structure? Are the lows protected within bullish structure? Well, you can see here all these lows that are being set, they're higher than the previous one, and they never break. Yeah. Again, bearish structure, the highs are protected. Why are the highs protected? Because all these highs that are getting created, price never comes to break them. Price never comes to trade above them. When we are delivered with a break in that, like this here, as you can see, price broke above this previous low, structural lower high, should I say. This tells us that price is no longer following the laws of bearishness. It's now following the laws of bullishness because the lows are now protected and the highs aren't, right? So anyway, so going back to my point, with this being bullish structure, we mark out the last structural low that is protected. So when we have a break in that, that tells us that we are no longer following the laws of bullishness and we are now following the laws of bearishness again. So perfect, we have been delivered with a break of structure. Now what's important to do is to look at the impulsive wave. So this wave here that traded us down, that broke the structure initially, for any areas of supply that price can come to trade back up into before trading goes lower. And that's exactly what we've done here, haven't we? So we had price trade down. There was an order block left here. We had a break of structure to the upside. Price just traded up. And then we've seen price trade down, breaking structure to the downside. That's exactly what we've seen. Price trade up, price break structure to the downside. Okay, so that we are literally rinsing and repeating the same process over and over and over again. So we break structure to the downside. Perfect. Let's have a look at the impulsive wave that broke the structure for any areas that have been left unmitigated. Well, I found a supply zone here. That price can come to trade up into. Lovely. Price has then come to trade up and into this supply zone. Brilliant. What do we look for again? We look for a break of structure to the downside. Why do we look for a break of structure to the downside? Because the break of structure tells us that this correction right here, trading goes into the supply zone, has finished, and the next impulsive wave trading goes lower is ready to take place. Perfect. So we have a break of structure to the downside. What do we do again? Well, we look at the impulsive wave. So this small red line here, we look at this impulsive wave that broke the structure for another supply zone that price can come to trade up and into, right? And we've done it here, and we've done it here. Yeah, so we're literally doing it over and over and over again. We're looking at the impulsive wave for any unmitigated areas that price can trade into before reversing. We look at this. So now looking at this third supply zone, we found another unmitigated area within this impulsive wave that broke the structure. Perfect. We wait for price to trade up and into this. Price is traded up and into this. What can we expect? For supply to be introduced, that to flip the S&D balance, and for price to trade lower. So what do we look for? Yet again, we look for another break of structure to the downside. So we look at the last protected low within this bullish correction. From here to here being the bullish correction, trading into the supply zone. This is the last protected low. Why is this a last protected low? Because this low went to create this high up here. So when we have a break in that low, that tells us that the correction trading us into the supply zone has finished, and the next impulsive wave trading us lower is ready to take place. So as soon as we have that break of structure, what do we do again? Well, we look at the impulsive wave that broke the structure to the downside for any unmitigated areas that are left over that price can come to trade into. Perfect. So we find one right here. Yeah. Now at this point, we are looking at this market on the 1 and 5 minutes. So these supply zones that we are looking at are so refined and so small that when we look to enter in the market, our risk to reward ratios can be absolutely amazing because we are getting involved with a fractal entry, but our higher time frame bias is to obviously take full advantage of that impulsive wave, that entire impulsive wave, right? So we've literally just looked at this with a microscope, and we've gone more and more fractal as we have gone down on time frames. So again, we have looked at the impulsive wave that broke the structure to the downside. We've highlighted another supply zone. When price pulls back into this one, bearing in mind we're looking now at the 1 and 5 minutes, that is when I enter. So I'd place my position as soon as we have the penetration and rejection to the downside. I would place my position. I would have my stop loss set just below the zone that I get involved from. So if I just unlock that, I would get involved from either here or this zone here, just to be safe. Just in case price wants to sweep the initial zone, okay? And I usually give a few pips leverage just for those liquidity sweeps. On top of that, spreads as well that are involved. I don't know what brokers people trade with. Some brokers have really rubbish spreads, depending on whether you be unrinsed with commission and things of that nature or not. But, dependent on your spreads, I would always say, and I'd always recommend just having 1 or 2 pips leverage above these zones and areas that we're looking to get involved from. Yeah. So as you can see, right, we are taking full advantage. We just zoom right the way back out. We are taking full advantage of an impulsive wave like this, but we are getting involved with an extremely refined entry like this. Yeah. So we can take full advantage of an impulsive wave, trading us lower like so, whilst getting involved with a very refined entry. And you can see that we are left with a risk reward ratio of 1 to 32. Now, there aren't many people out there that can trade or place a position in the market and deliver and it be a profitable position that delivers you with such great risk reward ratios. But this strategy allows that. And there is no bullshit in this strategy. A lot of people think risk reward ratios like that are foreseen, are just not possible. But we have proof that this works. I have years worth of back testing and proof that this strategy works and how it is implemented. Yeah, I mean this, for example, yes, it's not a 1 to 30, but it's a 1 to 18. You could have made 18% from this position by risking 1% of your equity. There's not many traders out there that can do that. So, and this is all about being critique, waiting for the right confirmation, and analyzing from every single time frame. Yeah. So it's literally just a repeat process that you're doing over and over and over again before, so you get to that fractal of a time frame that you can then place this position. Now, I mean, any normal person could have just placed the trade. If you're just a higher time frame trader, a longer term trader, you could have just placed your short position here like this. Yes, you would have got in at a better price because you're higher up, but your risk to reward ratio is not going to be anywhere as good as what it would have been by placing this. So yes, you have a 1 to 8 risk reward ratio, and that's amazing. But you could have a 1 to 32 if you continue to analyze the markets and look for that refined entry. So that's just a little like a brief introduction and how I place the positions. When I do my analysis for the VIP clients, I try to be as informative as possible, but I know it can be quite confusing at times. But as I say, it is literally just a repeat process. You're just looking for a supply or demand zone from the previous impulsive wave and going down and down and down on time frames and doing it over and over and over again to the point where you get to the 1 and 5 minutes, and then that's when you're looking to enter. Okay, so yeah, that's just a quick run through on my strategy and how that works. What I'm going to do is I'm just going to move this down so it's not in the way. If it wants to select it, that'd be nice. Let's just drag all of this down. 1 second, guys. Has that grabbed it all? Why is it doing that? Doesn't seem to be grabbing everything. It's because I've ungrouped it. 1 second. I've ungrouped from the group. Come on. There we go. Alright, in fact, let's just leave it there. Let's just not faff with it. But yeah, if anyone has any markets, thanks for the detailed explanation on strategy. Did that make any sense at all? Because I have a tendency to just rattle on and like not really think about how I'm explaining things. I understand that there's some people watching these videos are probably quite new to Forex, and it's probably going in one ear and out the other. But if it made any kind of sense, then amazing. I'm trying to find a way of explaining it in a more simplistic way, but yeah, it's just finding a way for everyone to understand. I mean, everyone learns differently, but are there any pairs or markets that you guys want to see me analyze for you today? Anyway, understanding more, it's identifying the supply zones, etc. For me too. Yeah, man. Well, what I can do is I can go. I'm more than happy to. Do you want me to run over supply and demand zones and order blocks? I can run over order blocks. Do you guys want me to go over that? Yeah, I know what you mean. Yeah, it always makes sense. It always makes a lot of sense when watching someone experience explaining like you are, but it's nearly impossible to replicate it by ourselves. Yeah, it's a bloody. I understand that. Yeah. Could you have a quick look on Nasdaq? Yes, I can do. Yeah. Look like it's tapping supply. Yeah, let's have a little look. 1 second. Let's load it up on here, and then I'll go over order blocks, because if you guys can understand order blocks, fucking hell, you'll it'll make your life so much easier. Nas, what do you say? Looks like it's tapping into a supply zone. Okay, let's have a little look. US 100. I'll put it on here actually. What am I doing? Did it come up just putting in the US 100? Okay. It is tapping into a supply zone. Spot on, mate. Ninja Dave, spot on there, buddy. Let me do some analysis for you now on this. So I always like to zoom out when I do a top down analysis. I always like to zoom out, look in as far back as I can, just so I can get a better understanding on how this market is performing. And what direction it's trading in. So evidently it's trading us in a bullish way. That's perfectly fine. So what I then like to do is zoom in and look more at previous data. What you could also do as well is mark out swing points, just so you've got a better understanding on, well, if price was to surpass this point, then it would mean that there was a complete reversal taking place. Yeah. So you could mark out like structural points like this being the last structural low, because that is at the moment. This would be the next structural low when this impulse trading us higher surpasses this high. Yeah. And then we could say like, because if we draw a path tool out, let's say, I can find my path tool. Where is it? Where's it gone? There we go. We could say, right, this bullish structure, perfect. This would be the next structural point or the next structural low as soon as price surpasses this high here, yeah? But until then, this is the last structural high. Anyway, we can do that if you wanted to do that, just so you've got a bit of a better understanding on how price is playing out, and you understand that we should be changing our bias depending on breaks in structural points. But if you are easy with that and you understand that, fine, that wouldn't be an issue. I would say you don't need to do that. Now, what I then like to do is zoom in and say, right, okay, well, first of all, I want to see if there's anything that's been left over here, because yes, price has come to trade down and has started trading us higher. We've had a break of structure to the upside to suggest that this correction trading us lower has finished. But we don't know that this isn't just part of a higher time frame corrective wave, yeah. And what I mean by that is price could come here now, reverse, and continue to trade us lower, right? Tapping into a supply zone, a demand zone, sorry, that's all the way down here, before then trading us higher. There is no suggestion that price couldn't do that. Do you know what I'm saying? So we need to be wary, and we need to make sure that we have checked everywhere else, basically. And I'll be completely honest with you, looking at this now, this right here is standing out for me straight away as an OB, yeah. So we could argue and say, well, this may be just part of the corrective wave that's trading us lower, yeah. So I've highlighted this out as a potential area that price could trade into. And then we should be cautious, and we should look at all these other candles just to see. So this comes to mitigate this. This green wick mitigates that, so that's fine. This comes to mitigate anything that's left there. That comes to mitigate that, so that's fine. Does that come to trade into this? Yep. That trades into that, that's fine. So everywhere else looks... That comes to trade into that. Yeah, everywhere else looks okay. So I would argue that's fine. So I'd say this is the only area that I would say has some potential for price to trade down and into. Now what we need to do is look at the current impulsive wave, or the current corrective wave here, and say, right, well, is there anything that price could trade up to before trading us lower? Well, as Ninja Dave marked out, there is an area here. But price has come to trade in this and this, so it would be interesting to see now how, when we go down on time frames, refining this unmitigated area and price. Yeah, so let's just go down to the daily. I want to take a closer look at this area. So it looks like that's fine. So let's go down to the 4 hour. My laptop's about to die, one sec. Is it charged? Let me just make sure my laptop's charging. I don't want it dying. Yeah, that's fine. Okay, cool. So I mean, I could refine it to this right down here, like that. That candle that's been left on its own, that's unmitigated. Also this as well. This I would argue has, but then it comes to be mitigated by that. And I'm going to go over order blocks in a minute. So people that don't understand what's going on right now, that's fine. I'll explain exactly what's going on in a moment. But you can see how prices come to trade into that perfectly. I just want to make sure that there's nothing else. We could actually probably look for positions in this going short. Yes, it's a bullish market overall, but there's no harm in looking for short positions because we understand price has tapped into a supply zone. If we are delivered with the confirmation that price is now looking to reverse, we've already got a direction. We've already got a direction to trade in. We already have an area to take profit. So, I mean, we could actually be looking for positions in this. I just want to make sure that there's nothing that I've missed here. I'm just going to go down to the 1 hour time frames, and then I can start refining things and show you what I would do in preparation to place positions. Okay. Okay. Right. So 30 minutes. Let's have a look. So that comes to wick into this, so that's fine. It's come to wick there, so that's fine. Okay. Okay, I'd be confident in saying that. I'm happy with that. What I'm going to do is drag this across because that was obviously invalidated when price decided to try to trade above it. Okay. So what we are seeing now is price trade up and in. We could say that this was the last structural low fractally within this bullish structure. This I would argue is the higher time frame structural low, but fractally this is the last protected low, yeah, within this bullish structure. What we've seen is price trade beneath this. We've already had a break of structure to the downside. What we are now witnessing, or what we now want to do. So you're watching me perform this top-down analysis now. So hopefully it gets a bit better of an understanding because you're seeing me do it live. So what we're seeing now. So let me just zoom back out. We've marked out a supply zone, yeah, for price to trade up and into, yeah, and we've looked at this and we found this from the last impulsive wave that traded us lower, yeah, perfect. So we've seen price trade into this, lovely. So we zoom in. And we're now looking at this structure. Perfect. So we can disregard everything else now because we've already know about testing. We've already looked and we've already highlighted and marked out potential zones. Now what we need to do is look at the impulsive wave that broke structure, which is this one here that I've just highlighted. So from here to here in price. So we're looking at the impulsive wave that broke the structure, this being the break of structure, for any other areas that have been left unmitigated. Perfect. We found one. Yeah. Price is actually now trading into it as we speak. I want to highlight this whole area out. I just want to make it nice and refined, so spot on. Perfect. Price is traded in. Now, what do you think that we do? What do you think is the next step? Remember, it's just a repeat process of what we've just done. What I'm also going to do is just make sure that there isn't any other areas that have been left unmitigated within this, but I don't think there is. There's actually a gap in the market which may need to be cleared. Potentially this as well. See, it's important that we always distinguish any other areas that price could reverse from. So there's that as well. That that's another unmitigated order block. But now that price is traded up into a supply zone, so let's just say this was the point at which price reverses from. Yeah, what would we do? We would wait for price to trade in like it has done. We would mark out the last protected low within the bullish structure that traded us in. So let's say this, for example. What would we wait for? Well, we would wait for price to break structure to the downside. And I'm hoping this is making more sense because I'm showing it live with an actual position. So we would wait for price to break structure to the downside. When price has broken structure to the downside, what do we then look for? Well, we then look within the impulsive wave, being this one here, that broke structure to the downside, for any areas that have been left unmitigated, for price to trade back up into. Yeah. Price then trades back into those, and then price trades lower. Yeah. So just to add to that, so that would be the break of structure right there. We would then look for a supply zone, an unmitigated candle, just as we have done twice previously. It would be there, and then we would enter on that. Yeah. So you can see how we've just done this over and over and over again. We find a supply zone. We mark out the break of structure. We then look at the impulsive wave that broke the structure, which is this. We highlight another supply zone. We wait for price to trade into the supply zone. Price trades in, like it has done. We mark out the break of structure. We then look at the impulsive wave that trades lower, that breaks the structure. We then look for a supply zone that is highlighted from the impulsive wave that broke the structure. We then wait for price to trade up. We then wait for rejection. And it's the same process that we're going over and over and over again. So, definitely could be looking to go short in this market. We either want to see a break of structure take place here, or for price to trade up into this one and then break structure to the downside, giving us the confirmation to enter in on those positions. So I will definitely be waiting. What we can do is we can set an alert here, because that would suggest the break of structure. And I'm also going to set an alert up here just in case price comes to trade, because I've got a feeling that price is going to want to clear this, and we've got an unmitigated candle there as well. So there's even more suggestion for price to continue trading us higher at the moment on this NASDAQ. So that's that. But yeah, I mean, did that kind of make sense? I think going over our live market in that way kind of maybe helps a little bit. Just checking comments. Did it kind of make more sense going over it on a live market? Yeah, fantastic. Good stuff, man. Good stuff. Yeah. In terms of gold, I know one of my clients, Nathan, he's in on a long at the moment. He's got a stop loss just below this demand zone here, which is good. I think he's in some good profits. I'm sure he entered at 1975. So trading 25-30 pips, but I think his stop loss was pretty refined. With this, I am actually wanting to see price trade down and into this demand zone before taking us higher. We are literally just trading with the trend at the moment. I have got this area marked out as well as a potential area to go long from, but that's if price puts in that higher time frame correction. Bless me. But yeah, is there any other markets that I can go over? I'm trying to see if we can find some fractal trades. Really, this has played out perfectly to the analysis that I provided. A lot of the time, obviously, with me having one-to-one clients that I get in calls with on a day-to-day basis, some days it can be quite difficult to provide entries or like specific points to enter in on the market. But what I do always provide is analysis. I provide it on TradingView and provide it in the VIP chats and things like that, and on my group chats, because I think it's important that I still provide content in that way. Now, the good thing is to those who make a conscious effort to understand and learn, you are able to take full advantage of that analysis. Do you know what I mean? That it's still providing you with trades and still providing you with trading opportunities. It's just in a different way. If anything, it's just encouraging you to use your initiative and place positions based on the analysis that you're reading and your understanding of the markets. Do you know what I'm saying? But here we are looking. I'm looking to get involved. So, in all honesty, we've just had price trade into this. Like that, bosh. Should we go down to 15 minutes? We could potentially be looking to go long in this market. I just want to see if there's anything that's been left mitigated. We can see that. Right, okay, so look at this here. Price was coming to trade into that. So actually, price may be putting in a higher time frame correction now, or it's not finished putting in this correction that it's doing, and it's actually come to trade. It's coming to trade into this here. Those are my thoughts. Because with price trading us in a bearish way at the moment, we wouldn't be looking to get involved in long positions until we've had a break in a structural high. Yeah. So this market is still trading us within a bearish way. So I do want to see price actually trade down. Before trading was up. This has been unmitigated, so price may come to trade into this. Before trading was down and into that, but let's see. If price does trade it into this, I may actually look to get involved in some temporary short positions, because it kind of gives us enough. From here, I would say probably not, but here I could probably get in on a nice refined entry, 4 or 5 pips, stretch my take profit, 24 pips, still walking away the 1 to 6. So I would say I would deem that as, it's worth placing. But we'll see how price plays out anyway. And then we can start, and then we can actually look to go long then as well from here in long positions, because this is a bullish market, as you can see. So at least we've got some scalp like trades that we could look to be placing soon. So I'm just going to set an alert on this here, and I'm also going to set an alert down here, and we can come back to that. I'm going to set an alert there for that one. XAU USD. I'm going to set an alert here for this one, just so we've got things that we can. An alert here for this one. I didn't think there'd be enough supply here. Okay, let's have a look. So we see if there's anything left unmitigated within that. Potentially here. I'm going to set an alert just there. Actually, I want to see if price reacts to that. And then US 100, that's fine. But yeah, is there anything? So what I'll do actually is I'll go over order blocks. If you guys want me to go over order blocks, I'll go over some order blocks, both supply ones and demand. I'm just going to go and put the kettle on, I think. Make it brew. And obviously we can expect an increase in volume as well in the coming, in like the next half hour, just with fundamentals. So but no, we've got some good opportunities here. Right, what I'm going to do, people, is I'm literally going to. We'll just leave this here like this. That to there like that, and then that can go way up, and then this. That. What I'm going to do is I'm going to be back in a second. Just checking those messages. If you guys want to see any pairs specifically me analyze, let me know. Just leave them in the comments. If you want to see me go over anything specific within my strategy, again, let me know in the comments, and then I can get that boxed. But I'm literally going to go and put kettle on, so I'll be back in 2 seconds. Right. Can you hear me? I'm guessing you can all hear me. What do you want to see me analyze? Let's have a look. Sasco markets. Could you please analyze the US dollar to the Japanese yen? Absolutely. And then I'm going to go over order blocks because I know that's a key interest for a lot of you. I'm always swayed with the Japanese yen markets just because they're just crazy. I mean, look at this. So vast. Right, let's do a full top down quickly, yeah? Shall I delete all of my... No, that's fine. Right, okay, so bearish market overall. Definitely within a bullish phase. Why are we in a bearish market? Well, obviously prices started down here, prices down here. That's evidence in itself. Prices within a bearish. It is a bearish market. Now, we need to look at the last structural low, okay? So, or the last structural, the lowest low that price has put in it, which is here. So then what we need to do is we need to say, well, what was the high that traded us into that? Well, it was this one. Why was it this one? Because price came down from here to here. Price came up to set a new lower high. Price then went down to set a new lower low. Yeah, so we'll just draw this out quickly. I'm just going to go from here so you guys can understand, right? Now what we've had is price actually break structure to the upside. Okay, so price is now within a bullish way, yeah? Now this probably looks a bit weird, but I'll explain in a moment. But you can see here that this would be the last structural high within this bearish structure. As we know, the highs are protected, the lows aren't in bearishness. So by us having a break of structure to the upside, tells us that price is no longer in a bearish way and price is now looking to go bullish longer term. Yeah, so we have the break of structure here. Perfect. Well, when we have a break of structure, what do we do? Well, we wait for price to pull back into a valid, obviously with this being now on the opposite side, so we're not looking at, whereas with like the looks of what market was it that we were going over that was showing an example. Like here, for example, we were looking for, even going back to my example, we were looking for the break of structure, then price to pull back, and we were looking for supply zones. Now, because this is the opposite way around, we've had the break of structure to the upside, we're still waiting for that pullback, but rather than looking for supply zones, we're now actually looking for demand zones, yeah? So we've had the break of structure to the upside, perfect. We now need to be looking at the impulsive wave that broke the structure for any areas that have been left unmitigated. So we need to look from here to here for any areas that have been left unmitigated, right? So I like to work my way backwards. So I'm just going to work my way backwards and go down so I can see one right here that's been left unmitigated. Why? Because price hasn't come to trade into that. And I'll try and explain now all the blocks whilst I'm going through this, but price hasn't come to trade into this. We've not seen price pull back to tap in before trading higher. Yeah. Whereas this may be considered an order block, but as you can see, so we would have highlighted this out, but as you can see, prices then pulled back and then traded higher. So it's tapped into this area in price. Yeah. So what we look for is a load of red candles in a green, in an impulsive wave, basically. I'm just having a look for any other areas that may have been left unmitigated. People would say, oh, well, is this left unmitigated? Well, no, because prices closed here, prices opened here, prices closed here, prices opened here, and then prices come down before trading higher. So it's actually mitigated that. So like I said to you at the start of the stream, and I said to everyone at the start of the stream, it is so important that you understand the open and closes of candles, because if you don't, and it's quite simple when you think about it, and you just do exactly what I did there. Okay, price must open here to close it. It gives you a better understanding on what price has tapped into, what price hasn't tapped into, how price is playing, things of that nature. So it's very important to understand the open and closes of candles. So that's fine. So we've got this as an area of interest. Everything above that's been mitigated from there, so that's fine. This has all come to clear this. I'm going to get rid of this path now so we don't need it. What am I doing? There we go. Price came down like this to trade into this because we'd say that's been left unmitigated, but price has come to trade into that. This, however, has not been mitigated. We're not seeing price trade down and into this. So I'd say that's been left unmitigated as well. So perfect. We have 2 points of interest for price to come and trade down and into before taking us higher in this market. So not only do we have a target, a take profit target for any short positions that we place, but we also have a potential area to enter in on long positions with a longer term bias, right? So now obviously zooming in, what we need to look for, we've obviously had the break of structure here, so that's fine. Now we need to go down to daily. We've had this, I would say, was the daily protected low. We can go from this here. Price is broken beneath that. Perfect. So we've already had suggestion that price is now trading us in a bearish way. We've had a break of structure to the downside. What should we be looking for? Areas that have been left unmitigated. I found one right here. Oof. Price hasn't come to trade into it. Has it? Have I just not highlighted this candle out properly? Let's have a look. We go to there, so the wick of that and the bottom of that, and we go from that to that. Let's go across. Price has come to trade into that. Has it? I don't think it has, to be honest with you. So let's go down to the 4 hour. If it hasn't, then we've got an area to enter and we can look for positions on this market as well. So no, we've highlighted that out fine. We could refine it to this here, but I'm going to just keep it as that for now. And price hasn't come to trade into that. But we see this happen with the US dollar, Japanese yen. It just doesn't quite tap into things and things like that nature. So I want to see price actually trade and sweep this. Without that, I'm not placing any positions in this market. So I would still beg to differ that this price is still within a fractal corrective phase. Okay, so we've had the break of structure to the downside. That's absolutely fine. We've already had the break of structure to the upside on the extreme higher time frame structure, so we understand that price is, and in terms of a higher time frame bias, this market is going to trade us higher. However, price is going to have to put in a corrective phase. We have confirmation of that because we've had a break of structure to the downside on the 1 hour time frame, on the daily time frame, should I say. So as I mentioned earlier with my strategy, we look at the impulsive wave that broke the structure, which is this one. We navigate and find any areas that have been left unmitigated. Now we are looking for supply zones. I've highlighted one here. We're simply waiting for price to trade up and into this. So as soon as price comes to trade up and into this, got my path tool out. As soon as price comes to trade up and into this, so let's say, I don't know, like this, we then want to see a break of structure to the downside, price to pull back into a fractal supply zone that we find from the impulsive wave that broke the structure, just as we have done here, and then we trade price lower, yeah? So our setup would look something like this. This would be the break of structure. This would be the supply zone. Obviously, this isn't exact in terms of price, but this is just me drawing out what it may look like. Yeah, so that would be the break of structure. That would be the fractal supply zone, just like this is a supply zone. So you can see that it's just rinsing and repeating the process. You see what I'm saying? How are we doing, Abdul? Is it Abdi Lucky? How are we doing? So you can see here, we have the break of structure, yeah? We have the break of structure. We look at the impulsive wave to find unmitigated order blocks. We found one. We wait for price to trade in. We have a break of structure. We look at the impulsive wave that broke the structure, just as we have done here. We've looked at the impulsive wave that broke the structure to find a supply zone. We look at the impulsive wave that broke the structure for a supply zone. We find one. We wait for price to trade in. we wait for a break of structure again in and around that supply zone. We look for the, you know what I mean, and rinse and repeat in that process. Yeah. So these are my thoughts for US dollar to the Japanese yen. Definitely looking to go short. Well, I say temporarily. It could take us through for quite some time down and into this. So definitely looking for short positions. We just need to wait for price to actually trade into this now. So I'm going to set an alert. You guys can do the same. Set an alert round. Give you the increments now. 145.12. As soon as we have the penetration of this, we can start to look for short positions, assuming we are delivered with the rejection we need and the breaker structure to the downside. But yeah, definitely a bearish market at the moment, just with it being in that corrective phase. Obviously, higher, longer term and higher term, you can see here that we've had the break of structure to the upside. So we've had confirmation for the overall bias that price is no longer following bearish structure, it's now following bullish structure. We just need to wait for price to pull back. Now, if I just get my path tool out again, just so I can kind of show you guys a little bit better, you can see that this would be, say, the last structural lower high, then we have a lower low, then we have a lower high, we then have a lower low, this low comes lower than this one, and then what we see is price break structure to the upside. So we've broken structure, and we are no longer following the laws of bearishness, we're now following the laws of bullishness. So we have protected lows now, and we break the highs. So whether price pulls back down and into this one, or down and into this one, it's still going to create a low, should I say, that is higher than the last one, right? So let's just say it reacts to here. We can then expect a new impulsive wave to trade us higher, creating a new higher high. And you can see that we are no longer following this bearishness. So we'll just go like this to this to this to that, and I'm going to redo that. So this would be from there to there to there to there. I'm going to change the color of that to yellow. So you can see, right, we have clear bearishness. We have lower highs and lower lows being introduced. We are then delivered with a break of structure here, which instigates new bullish structure. Yeah. So now we're trading in a bullish way. So yes, we are within a bearish phase within this new bullish structure, but it's only because we're taking part now in this correction. This is an impulse. This is the correction. Impulse, correction, impulse, correction. Yeah. So we are within the corrective phase at the moment. So we can be looking to go short in this market, but overall we should be looking for long positions. Hence why I've highlighted these two zones and areas out. Simply just waiting now for price to trade up and into this. Here. But that's my setup basically. Now, if we wanted to look to buy into this before we go short, before we go long, we can do. Okay, perfect. So here, price has come to wick into this unmitigated candle. This has been left unmitigated. Price has come to wick in. Perfect. So we could look for some temporary buy positions in this. And when I say temporary, I mean just buying into this market up until into the supply zone. So what I want to see is a break in this high. BOS needed here. Why do I want to see a break of structure here? Because it tells me that this correction here trading into the demand zone has finished, and the next impulsive wave trading us higher is ready to take place. Is getting into the demand zone. GU is getting into the demand zone. Yeah, so I want to see now price trade above this. That would give us the confirmation that this correction has finished. The correction trading into this demand zone is finished. And then price will pull back into a fractal demand zone, and then we can get involved. So I'm going to change that to 2 pixels. and then we can look for anything that's been left unmitigated. So look, if you look at this, this is an unmitigated candle right here, this little red one. Price has come to trade into that perfectly, you see. Now, what you'll notice actually is there's another one here. Now, that's nothing to be worried about. If anything, that gives us a point of interest for price to reverse down and into, like this, yeah? So, from performing that top-down analysis, not only do we have shorter term positions, but we also have longer term positions that we can look to be placing as well. So I could now just simply wait, set my alerts and wait. And this is the beauty of how we trade. Wait now for price to trade down into this demand zone that I've got marked out. I obviously want to see a break of structure to the upside first to suggest this correction's finished. We can then trade the next fractal impulsive wave, trading us up and into this within this correction. Once price has then traded us into this, we would then wait for the break of structure to the downside to suggest bearishness. So we would then look to potentially enter from, let's say, here. I don't know why it's done that. 1 second. I just want to show you how now, from performing a top-down analysis on this pair, I've managed to... What the hell is going on? 1 second. Sure. I don't know why it's doing that. Let me just change this. Stop loss. Grab it. Right, perfect. Now, the good thing is when it gets to price breaking structure here to the downside and for price to trade into another supply zone, we will look for a break of structure in and around this and get ourselves a refined entry. So I just want to show you the positions and my thoughts on this market overall. So we have our second potential position here. Let's go to the hour time frame. And then from here, we can then look to go long, assuming we are delivered with a confirmation to do so. So we have, and this will trade us up, creating new highs because we understand that price has broken structure to the upside. So we understand that this high realistically should be surpassed. Why? Because in the laws of bullishness, we have the breaks in highs and the protected lows, yeah? So we understand that this high should be broken to create a new higher high. So by setting our take profit just below that, it guarantees that our take profit can be achieved, yeah? So just by performing a top-down analysis on the US dollar to the Japanese yen, not only do we have a buy position that we can place here, a temporary buy position, but we can also place a longer-term sell and then extreme higher time frame position here, trading us higher into this market. So we've got three trades that we can look to place over the course of the next few weeks and months. But the most recent one that we should be paying attention to is this here. And this is something that we can probably look to place in the coming hours. So I'm just going to set an alert there. And I'm also going to set an alert up here as well. So we've got an alert set here to highlight the break of structure and also an alert set there just to highlight the penetration of that demand zone. But I hope that helps, Sasco. I hope that gives you a better rundown on the market. Still waiting for alerts to go off. This is what I tend to do. So I'll do like my analysis for the day. I usually do it early hours of the morning, 8, 9 o'clock in the morning, and then it's literally just a case of waiting for alerts to go off. As soon as an alert goes off, I can then go to the next step and then prep for the position to be placed. Yes, thank you so much. No problem at all. So it looks like this alert is about to go off. Let's just see. Let's see how price plays now. How long have we been live for? That's the question. 1 hour and 16 minutes. Wow. Right. That will explain this increase in volatility. Okay, lovely. Let's see. So fundamentals have just gone off as well, haven't they? Yeah, so we've just had the euro. We just had the results for the euro, the main refraining rates. They've come back. They've come back the same as expected, the same as the forecast. Did another one go off? Perfect. So we've had the penetration of this here. Okay, cool. So anyone who got involved in shorts there, well done. I want to see price now reject to the upside and start trading us higher here like this. So I'm just going to leave this here like that for you all. We need to be wary now of fundamentals. If we want to get a nice entry on this market, I'd be waiting. Not for price to do that. I'd be waiting for price to break this. I'm going to trade higher. Why? Because that tells us that this trading down is finished and the next move taking us higher is ready, yeah? So my entry would be somewhere like this, yeah? So I'm just going to set an alert there. That's our next alert to set. Now, people who are impulsive and maybe are more aggressive, not so much impulsive, but maybe more aggressive with their approach, they may be in already on this. People, I know some clients of mine like to just get in straight away from these supply and demand zones. That comes with an increased risk of obviously losing positions, but it means that you never miss an opportunity. Let's see how price reacts to this as well here. Price seems to be holding so far. What I'm going to do is I'm going to wait, though. I'm going to wait. Me personally, I'm going to wait. Yeah, I would rather wait for further confirmation, to be completely honest. So I'm going to wait for price to break that. Wait for price to then pull back. We can get in on the refined entry. So we should have a position soon, actually, on Great British Pound to the US dollar. In terms of the euro, we're seeing price trade beneath this. Is this a sweep in it, or is it going to hold? If so, not an issue. We have two other demand zones that we can look to get involved from, and if anything, we've got a better price. Do you know what I mean? They're offering us better prices, so we can stretch our take profits further. No biggie. This has been left unmitigated. So price is probably going to come to clear that, and there's also this as well. So price is trading in and around it at the moment. We may see price come up and then trade down, continue to trade down. Be interesting to see how price plays here. Price has disregarded this one. That's absolutely fine. Fundamentals have overrun that. So that's not an issue. I've got those two areas as marked out because price may want to come and trade up above before trading us lower. But this is really what I'm looking to get involved from. However, price could come as low as could come up to this and then reverse from here. Well, let's see. I'm just going to set an alert here as my next target area. Perfect. Also going to set an alert there as well for anyone who's wants a more aggressive approach. XAUSD's fine, as a decod's fine, that's fine. Okay, cool. It's just a case of waiting now. If anyone has any questions, leave them in the comments and I get them answered. I think I'm going to go for it and place a position on a Great British Pound to the US dollar. Yeah. 1, 2, 9, 4, 8. For 1 like that, so 1.2 941 8 pips. 90p, isn't it? One to 8. Alright, let's have a little look. Was there anywhere else that we had in mind? I don't think there was there? See how this plays out now. I want to see a break in these highs or a break in this high to suggest that this is finished. Let's move this aside. Nothing's been sent as of yet into the chat. Seeing price bleed beneath this now. Okay, XAUSD, the euro, that's fine. Is there anything else? Price has come to sweep this. We want to see price reverse from somewhere, some kind of breaker structure to the upside to suggest that this correction is finished. We can get in on our entries. Just making sure there's nothing I've missed. It's been swept. No. Okay, that's fine. So we'll look and see. XAU as well. Okay, so we've had that. That's fine. This is the only issue when fundamentals are involved. When we have large volume trading into these zones, that's something that we want to see. We do want to see that. By the same time, when it means that we then have to wait for further confirmation, and this comes from breaks of structure to the opposite side, when these breaks of structure are so far away, it can obviously cause our positions to not have as great as risk reward ratios as we wanted. It's literally now just a case of seeing how price plays now. Good stuff, man. Good stuff. What positions did you place on gold? Oh, was it a short to down into that? Good stuff, though, man. That's what I like to see. Just waiting now for further confirmation. This is part of it, you see. So like there's times when there's times where there's no, I don't have any trades to place. Do you know what I mean? During the day or the week. Let me go back onto this here. 1 second. Where's my? There we go. Yeah, I mean, there's times like, and this is the difficulty. See, like, sometimes like either your analysis doesn't play out exactly as you want it to. Your supply and demand zones are missed. The markets don't have enough volume or volatility to place positions. There's a lot of things that come into it. So that's why, like, for me, like when you see like these gurus or these Forex people on social media and they're offering you 9-10 positions a day, that's when you need to run a million miles, because if they can offer you 9-10 positions a day, then they're either fucking hell, they can't be human, because the markets just don't play like that. Do you know what I mean? You would have like a few pairs that you look at. I usually have 3-4 pairs that I look at religiously every single week. I do my top down analysis. I mark out my zones and areas, set my alerts. If price trades into those zones, delivers me with the confirmation I need to enter, I place the positions. If they don't, then my analysis has been invalidated. I'm not going to place any positions. So when people can offer you 10 trades a day, that is when you need to go running, because those types of people are just sending you shite at the end of the day. It's just sending you trades that, you know what I mean. I could send a load of rubbish, and I could give you my overall bias on how I think the market is going to play out. 9 times out of 10, I'm fucking right. I'll be straight up. I can predict the direction of a market, and I'm pretty spot on every single time. Now, to give you specific entry points with stop losses and take profits, that's something you can't always provide, and you can't always do, because price can put in structure fractally or on the higher time frame scheme of things before following the direction that you've so desired. Do you know what I mean? So yeah, people that say, oh, I get 10 positions a day, load of rubbish, man. Like Euro USD JPY. Let's have a look. Euro USD. Okay, cool. So we've had a break of structure to the upside on this, so that's good. So price is playing out as we want it to. We now want to see price trade back down and into this. And what was the other one? What was the other alert? Was it Euro Great British Pound? USD is strong. Yeah, it's just down to recent fundamentals. It's not even so much that the US dollar is strong. It's just more the case that we've had. Let me just check this. Euro, was it Euro Great British Pound? I don't remember what marker it was now. For that other alert. Yeah, short, brother. Oh, good stuff, man. Good stuff. That's what we like to see. Price has come to trade beneath this, so this is now my next target price. If we can get a reversal from here, then we will be onto a good win. I like. going to keep this marked out and have this as just to show that we had that marked out, because it was marked out originally. I'm going to close this. Had that on there, that's fine. Close it out, save it. No, I don't need that. We just want to see price pull back now. We can look to go long in the US dollar, Japanese yen. We're having rejection now to the downside on this, which is good. Was price coming to just clear this candle and then breaking that there. Potential trade on here as well. I'm just going to mark this out as an area of potential, as well as this as an area of potential. Like that on the NZD card. Set an alert. Set an alert on there. Perfect. Let's see how price plays. I'm still in on longs on this as well. I've taken 2 partials. So I've got 33% left running on this. I usually take a 50% partial at 3RR, and then I've taken another small partial for like another 16%. So still got a third running, but stop losses at entry on this. So hopefully we get a reversal from this demand zone and we can look to get involved in some buys on that. It's fine. There's alert sets for this one. I just want to make sure that we've got alert set for that. NZD card, we've got alert sets for this. That's fine. And then alert sets for that. So we're pretty set. GU seems to be rejecting the zone. GU. Price has already come to sweep that. I had something marked out on here. Where's it gone? Pretty sure. Let's get rid of that a sec. Where was it? Get rid of this as well, just so I can clean this up. The price has come to trade into that, so it's not there. Where the I'm gonna mark this out actually. So your bias can change as well, like with how the price reacts, especially with fundamentals. So let me get rid of this. I want to see price trade into this, and this would still be following the higher time frame structure. So as you can see, it's just like price putting in bullish just like this. That's still following our higher time frame bias. From that to there, so this could be a potential area to look to get involved in shorts from. Shorts from there. something like that. Let's see how that plays. Yeah, absolutely, man. Absolutely, Greg. What I'm doing is I'm just updating everything. So this as well with that. Interesting. I want to see price come and trade into this demand zone down here, but price is currently clearing this. And the annoying thing with this now, see, is because we've had price bleed out like this. When it comes to getting confirmation to actually buy into this market, realistically, we want to see price break structure to the upside from one of these demand zones. But in order for us to have a break of structure to the upside, not only we'll need to look at the last structural low, the last structural high, and the last structural high is up here. Do you know what I mean? So or I'd say at least there on the 1 minute. I'm definitely looking to go long. I'm still looking to go long in the Euro USD. Price is pulling back nicely into this, I think, as well. So let's see potential for that. Price is just pulling back before it continues bearish. We've got our alerts set anyway. Let me just make sure. I don't need an alert for that. We can wait. Let me just set an alert on this for here. And then this one for there. Perfect. Are there any specific zones, areas that you guys want to see me go through? Brilliant stuff on that short though. On gold earlier. Is Nasdaq not on MC4? But actually, by the way, I forgot to ask. I swear I can never find it. No, it is. It is on there. Let me see what it would be under for you now. So now the files are a bit different. Let's have a look. To be fair, they don't have. They should have it. What you want to do is you want to go to the CFD files. And then once you're there, there's the UK 100. There's the US 500. Trying to see if I can find. Unless I've already got it added, actually, I might actually have it added on mine. Yeah, just go to. Yeah, I've already got it added. It's just the NAS 100. So just literally go to. Let me see if you can see this. Can you see this? So you will see. Is it showing it? No. Where is it? Boom. NAS 100. That's what you want to look for. You just want to go to cache CFD1. That's the file that it's under, and you should find it. Wow. You're still involved in shorts from that. Fair play. I want to see price trade into this. I want to see some good rejection. Thirsty for a position. Love that. Right, bear with me 2 seconds, people. I'm literally just writing something up for everyone. Just for the GDP growth at 2.4% in Q2. So let me just type this up. Okay. So the GDP, i.e. the gross domestic product of the United States, saw an annual increase of 2.4% in the second quarter of 2023. The Bureau of the Economic Analysis revealed in its advance estimate on Thursday. The reading came in higher than expected and above the figure registered in the opening quarter of 2023. So with that being said, the increase in real GDP reflected increases in consumer spending, non-residential fixed investments, state and local government spending, private inventory investment, and federal government spending that were partly offset by decreases in exports and residential fixed investment, the report stated, adding the imports declining during the reported quarter. What I'll do is I will post this now on here, and I'll also stick it in the chat as well. Whoa. Got out in 1975. 1975. Oh my god. Imagine. It's 120 pips, man. No, it's not too bad. It's not too bad. Hey, brother, profit is profit. What I'm going to do is I need to just post this in here. If I can. Well, let me post it in the chat. Oh, it's not going to let me post it because it's too big. So let me post it in this. 1 second, guys. Just posting this this update, this fundamental update out. So that's on that, and then on this live as well. Yeah, it's not gonna let me post it. It's too long. If you want updates on fundamentals, just join the Learning Lounge group chat. It's all posted in there. Right. When I look to get involved in the US, there's so many setups that we have now. It's literally just waiting, just sitting, being patient and waiting for our setups to play out. What I might do is, how long have we been running for? I know that's the problem. See, caught a nice drop. Still, I'm happy with it. Been playing on an account trying to flip it. Gone from 30 to 120. Not bad. Practice before. Yeah, man. Good stuff. Good stuff. Good stuff. Just remember risk management, things of that nature. Your text is too long for one message. It is, brother. Unfortunately, but what I can do is sorts itself out. So I can show you this. I posted the update on here for you all to see. Is there a way of like making it so it's just part of the screen like this? Is there anything you guys want to see me go over or do quickly before? So what I might do is just have a little break, readjust analysis, things of that nature, and then I might come back on and elaborate. But if there's anything you guys want me to go over now, before I do call it a day, please let me know. Let's check this. Yeah, no, that's fine. In fact, what I want you guys to do for me is there is a post on here. Where is it? Try and find this now. I'm sure there's a post somewhere. Or did I put it in? Oh, here we go. There's a post here. If you guys could ask any questions, XAU USD long, I want to see price go long from here between 1959 and 1958. That's if price wants to react from it, but price is bleeding out at the moment due to fundamentals, so it'd be interesting to see how that plays. But no, what I want you guys to do is if you could go to this message here on the Learning Lounge group chat, either leave a comment underneath it with questions or drop me a message directly on on Telegram, should I say, and then I can get them answered in a video. Because what I want to do is I want to make a Q&A video. I want to make a Q&A video in the next coming days that I can post on YouTube. Just like common questions that people may, of things that people may want to know in terms of Forex. So yeah. Any questions? It doesn't even have to be Forex related. Just any questions. It'd be good if they were of some relation to Forex, but they don't have to be. See how price reacts to this. Okay, so I've got some messages already, actually. Yeah, just keep on sending messages through, people, on either on this or just drop me a message directly. Okay, perfect. But yeah, so we've actually seen price reject well from this zone so far, but I want to see some good rejection from it. What I'll do is I'll highlight this out for you all now, and then what I'm going to do is have a bit of a break. I might come back on later and hopefully have something for you all. 68, like that. Happy days. Let me just make this bigger. Gold is flying. It is. Right, bear with me 2 seconds, people. What I'm going to do is I'm going to nip to the toilet. And then I'm going to end this stream when I come back. I'll have a quick run over the pairs that I'm looking at getting involved in today, and tomorrow and next week. And then I'll call this stream a day, and then we will look to either do another stream later on or potentially one tomorrow. But if you have any questions, leave them in the comments now, and then I can get them answered for when I come back. I'll be back in just 2 minutes. Oh, your USD. One sec. I'm dying for the toilet. Okay, cool. Oh, this is where I want to see price react from. Ugh. Thankfully, I've still got like 33% of my position running on this. But my stop loss is at entry, just in case. Right, back in 2 minutes, people. 2 minutes. Right, I'm back. XUSD, what's going on? Seeing good rejection from this demand zone. Called it. Price is traded beneath this. I can't believe how much this is flying. Wow. I wouldn't even want to touch that, to be completely straight here. Euro USD though, let's see. Definitely looking to go long in this market again. I just want to see some good rejection. Let me just move this to the left. Can bring this across. Mark this out as the last structural high within this bearishness. I've got the hiccups now. Right, so See price reject, pull back, bosh, we'll get involved there like that. Should be able to get in on a good little position here. Just want that confirmation now. Seeing good rejection there though. 14-ish pips. As I say, some people might be preemptive and place positions as soon as we see the penetration and rejection to the upside. Me personally, I like to wait for further confirmation. Just got in on a little long on Great British Pound to the Japanese yen, hit some key support flying since I got in. Great British Pound to the Japanese yen. Let's have a little look here. Trading well today, aren't you, bud? Great British Pound to the Japanese yen. That's what we want, man. Yeah, I'd say that's valid. You may see it fly now, bro. Mark this out, this right here, like that. And then drag this across, you'll see prices come to liquidate and clear that. Price is trading perfect. I mean, if you can get a break of this high here, so if your trade now goes on to break the high at 18156, I'd be confident in saying that the low that you got involved in, if you got in around here, would be fine and protected, and we should see this continue to fly higher. So that's not a bad effort there, bro. Gold is rejecting well from this. Your USD is rejecting well from this. I just want to see a break of structure. As I said to you guys earlier, a lot of people may be preemptive and just fly and jump straight into positions as soon as we see rejection to the upside. Me personally, I don't like to do that. I like to have all pieces of confirmation in order to place a position. Hence why I'm waiting for the last protected high to break, for price to then pull back, and then that's when we can look to get involved. Not only do we get involved with the refined entry, but we also have further confirmation that that the market is going to trade in the desired direction. Yeah, so just a higher probability that our trade is going to be successful. But yeah, I mean, although we've had crazy fundamentals, prices playing out relatively well, and rejecting well to some of these zones that we've got highlighted. Your entry was 181.40. Okay. Just make sure you apply risk management with your trade, bro. But yeah, I think what I'm going to do, I've given you guys some zones and areas to look out for. We want to see a high we want to see a break in this high here at 1.1087. Once we have that, we can expect price to pull back into a fractal demand zone. That is where we'll enter from. Great British Pound to the US dollar. I want to see price pull back into this unmitigated last buy to sell region before trading us lower down and into this, where we'll then be looking to trade price higher. XAU USD, I'm looking for price to reverse from here to trade us higher. However, price is hesitant. Don't know if price is going to stick. We'll see. But again, potential buy positions on gold. We just need to wait for that reversal, wait for the confirmation in order to actually get involved in this market. Been flat out on partials. No, moving SL. And moving SL. Good stuff, man. Good stuff. What else? Again, pullback needed for this, into this, and then we can look to trade price higher. We've already had confirmation now that price is going bullish. It's what we want. That's fine. We see price trade upwards to that. Yeah. I want to see price trade lower and traders lower on the NZD CAD as well. So something like this. Down like so. But yeah, what I'm going to do, people, is I'm going to call this session a day. If you need me for anything, drop me a message on Telegram. I'll show you my my handle now is LAGFX. That's my Telegram handle. So if you need me, by all means, drop me a message on Telegram. I will be updating the clients in the VIP chat on these pairs. Your USD is looking good for buys, people, as well. Again, if you want to wait for further confirmation, like I'm doing, wait for price to break structure to the upside first, and then the pullback. But this is looking good so far. We are seeing some good rejection to the upside. Yeah, same with quite a few of these pairs. So just have everything in mind. Go back, rewind the live, and look at the analysis that I've put out. If you're unsure about anything, if you do need me, again, please just drop me a message on Telegram, and I'll get back to you as soon as possible. Yeah, I hope you guys have enjoyed. I hope you've all learned a thing or two. I hope you guys have maybe managed to get involved in some positions. We've not had any specific entries throughout the live, but what we have had is paths drawn out in the directions I wanted to see the markets traveling. So hopefully you guys have gained something from this, whether it's a better understanding on the strategy that I use, the markets themselves, or just my analysis. But yeah, I'm going to call it a day. I hope you guys have enjoyed. If you do need me, as I say, please drop me a message on Telegram.